Hello and welcome to the channel. I appreciate you stopping by for a visit. Today we're going to take a look at my portfolio holdings that are reporting Q1 earnings for week 19, covering May 5th through May the 9th, 2025. The earnings calendar shows Palantir and Realty Income reporting on May 5th after the market close. Uber reports on Wednesday, May 7th before the bell, while Q2 and EPR Properties, Jackson Financial, Fidelity National, and F&G Annuities Life reports after the closing bell. For May the 8th, Warner Brothers Discovery and Nexstar Media share results before the market open, with LYFT and Rocket Labs reporting after the closing bell. For each company, we'll examine the revenue and earning estimates and the options market implied move. We'll review the current stock charts, looking at relative strength and momentum indicators. I'll be interested to read your comments for each of these companies as we await their earnings reports. I would also like to know if you hold any of these companies in your stock portfolio. Let's get started. This worksheet shows the companies that have already reported, those that are a part of my portfolio. Johnson & Johnson reported in week 16. Their initial response was down, and 1 week later and 2 weeks later, they were showing improvement with positive results. USB reported in week 16. They beat on the top and bottom line. The initial response was down, followed by the next week, and 2 weeks later, they were both in positive territory. RTX reported, beating on both the top and bottom lines. The initial response was minus 9.81%, exceeding the implied move. But the following week, they were almost at break even, trading down about 0.31%. Tesla reported, missing on both the top and bottom lines. The implied move was expected to be 10.77%. The initial response was actually 5.37%, and a week later they were up 18.57%. Agree Realty beat on both the top and bottom lines. Initial response was down 2.4%. 1 week later, 1.9%. T beat on the revenue, missed on the earnings, but the initial response was positive. Along with 1 week later, they were up 2.74%. AbbVie beat on the top and bottom lines with an implied move of 482. The initial response was actually up 3.15%, and the following week they were up 9.15%. Centene reported, beating on the top and bottom lines. Initial response, they were down. 1 week later, they were down about 3%. ETR, Entergy, missed on revenue, beat on earnings. Initial response was down. UPS beat on both the top and bottom line. Initial response, they were down. Altria Group missed on revenue, beat on the earnings. And the initial response is they were up 1%. Ares Capital missed on both the top and bottom lines. The initial response was down 2.73%. PFE missed on revenue, beat on earnings. Initial response was up. WP Carey missed on both the top and bottom lines, but the initial response was actually up 2.3%. S Midstream was in line on revenue, missed on earnings. The initial response, they were down 3.48%. Microsoft had pretty much a blowout earnings report, beating on revenue and earnings, and the initial response was 7.63%. Prudential missed on revenue, beat on earnings. The initial response was down about 1%. F&G Properties beat on revenue, missed on earnings, and they were down. Initial response was 1.59%. Hershey beat on the top and bottom lines, and the initial response was pretty much break even. NNN REIT beat on the top and bottom, and the initial response was up about 1/3%. MPW missed on revenue, was in line for earnings, and the initial response was down about 7%. Amazon and Apple beat on both the top and bottom lines. Amazon was down 0.12%. Apple was down 3.74%. And Chevron missed on revenue, beat on earnings, and they were up 1.64%. So I'll continue to track these earnings for 1 week later and 2 weeks later. Then we can look at week 19, which is the current reporting week, and got everything set up to do the initial response and track it for 1 and 2 weeks later with the implied moves in mind. Before we look at the individual companies, I want to take a couple of minutes to discuss the current market conditions, as this may affect the market responses to company earnings. So we can see on the SPX chart that we peaked on February the 19th, and we reached our low on the SPX on April the 7th. And we have since retraced about little over 61.8% of that peak to trough decline. We're also in a situation where we've had the SPX up 9 consecutive trading days with higher highs over those days. We have broken through many resistance lines like the 20-day moving average. We broke the 50-day moving average resistance yesterday and closed above that, getting very close to this 200-day moving average. We also crossed a resistance line from about March the 10th or 11th, where we had reached a bottom, recovered, came back and retested that, moved a little bit higher, and then following the announcements of the tariffs, we had a pretty significant drop in the market overall, affecting nearly all equities. We chopped around as the tariff negotiations were going on. Then company earnings really started in earnest, and those earnings, many performing better than what was expected, has led to a condition where the market is really set the tariffs aside for the interim term and focusing on these earnings. With that all said, the statistical probability of us continuing on a run like we've been on for the last 9 days is actually, in my opinion, pretty low. So I still think we're going to reach some challenges here in the short term, probably have some pullbacks, maybe to this 50% line or even the 38.2% line for the retracement before we are in a position to really move higher. The RSI on the SPX is improving, and it's above the 50 line, sitting at 59.63. And the PPO had a crossover here on about April the 25th or 26th. And the momentum is definitely improving. The 12-day moving average of the PPO is in positive territory at this point, and the momentum has been increasing or the divergence between the 12-day and the 26 has been increasing on a daily basis. If we take a quick look at the VIX, we can see that we peaked out 60.13 back earlier in April when the tariffs were announced that were a little higher than the market was pricing in at the moment. But we have been on a steady decrease where we're back down to about the 22.68 level at the moment. I'd really like to see it get to this 200-day moving average or below. We could struggle. We might see the VIX move back and forth as we move through these tariff negotiations. Palantir Technologies reports Monday, May 5th after the market close. In the previous quarter, Palantir reported revenue of $727.52 million, beating revenue estimates by $51.61 million. Palantir reported earnings of 14 cents per share, beating estimates by 3 pennies. For this quarter, the revenue estimate is $862.13 million, with earnings per share of 13 cents. Over the last 90 days, 12 analysts raised estimates and no analysts lowered estimates. Palantir meets or beats analysts 1 year forward estimates 75% of the time. The options market is pricing an implied move of 14.31%. Between the all-time intraday high on February the 19th and the intraday low on April 7th, Palantir saw a 47.28% decline. But since that point, it's nearly recovered 100% back to all-time highs. We also see that we had a PPO crossover on April the 9th that was confirmed by a positive RSI above the 50 line. Since that point, the RSI has increased to 72.45, indicating an overbought condition. We can also see on the accumulation for the past 6 months has been very steady and upward for Palantir. Palantir, with the exception of one day this week, also has seen higher highs for 8 of the last 9 trading sessions. Realty Income reports Monday, May 5th after the market close. In the previous quarter, Realty Income reported revenue of $1.28 billion, missing revenue estimates by $2.64 million. Realty Income reported funds from operations of $1.02 per share, missing estimates by a nickel. For this quarter, the revenue estimate is $1.30 million, with funds from operations of $1.06 per share expected. Over the last 90 days, no analysts raised estimates and 4 analysts lowered estimates. Realty Income meets or beats analysts forward 1 year estimates 100% of the time. The options market is pricing an implied move of plus or minus 3.29%. The Realty Income chart has shown that the price has recovered pretty well from the highs before the tariff announcements and today. We do see a bit of decline in the RSI, but we're still sitting above the midpoint at 53.03. We did have a PPO crossover in the middle of the month, but we can see that we're starting to lose a little bit of momentum here. Uber reports earnings on Wednesday, May 7th before the market open. In the previous quarter, Uber reported revenue of $11.96 billion, beating revenue estimates by $185.32 million. Uber reported earnings of $3.64 per share, beating estimates by $3.04. For this quarter, the revenue estimate is $11.61 billion, with earnings per share of 70 cents expected. Over the last 90 days, 22 analysts raised estimates and 5 analysts lowered estimates. Uber meets or beats analysts' 1-year forward estimates 100% of the time. The options market is pricing an implied move of 8.25%. Uber has also recovered quite nicely from this recent downtrend, surpassing the highs that we saw back in mid-February, February the 18th or so. We can also see strong RSI sitting above the 50 line at 69.41. And we did have a PPO crossover earlier in the month. So Uber is still showing strong momentum, relative strength moving into the earnings. QTWO Holdings reports on Wednesday, May 7th, after the market close. In the previous quarter, QTWO reported revenue of $183.05 million, beating revenue estimates by $3.09 million. QTWO reported earnings of 48 cents per share, beating estimates by a penny. For this quarter, the revenue estimate is $186.49 million, with earnings of 48 cents per share expected. Over the last 90 days, 5 analysts raised estimates while 2 analysts lowered estimates. QTWO meets or beats analysts' 1-year forward estimates 75% of the time. The options market is pricing an implied move of plus or minus 10.12%. QTWO Holdings has been in somewhat of a downtrend since early December of last year. It has had some ups and downs. This one here because of the tariff announcements, but we are seeing now an uptrend. This primary downtrend was primarily due to the lessened interest in AI data centers. We are seeing improved RSI. We're sitting above the midline at 55.95, and we did have a PPO crossover. The 12-day moving average is in positive territory at this point, so it does have somewhat better momentum and relative strength moving into earnings. EPR Properties reports on Wednesday, May 7th, after the market close. In the previous quarter, EPR reported revenue of $177.23 million, beating revenue estimates by $15.98 million. EPR reported funds from operations of $1.23 per share, beating by a penny. For this quarter, the revenue estimate is $164.18 million, with funds from operations of $1.18 per share. Over the last 90 days, 4 analysts raised estimates and 1 analyst lowered estimates. EPR beats analysts' 1-year forward estimates 91% of the time. The options market is pricing an implied move of plus or minus 10.12%. EPR was trading at all-time highs at the beginning of March. Started with a little downtrend since that particular point up to the tariff announcements, and much like other equities, we saw a pretty steep decline. But since then, EPR has recovered probably around 75% of the price decline to where it sits now at $49.93. We can see the relative strength indicator is above the midpoint at 55.7. We can also see we had a PPO crossover in the middle of April, with the 12-day moving average in positive territory at this point. So EPR is showing good relative strength and good momentum moving into earnings. Jackson Financial reports Wednesday, May 7th after the market close. In the previous quarter, Jackson reported revenue of $1.44 billion, missing revenue estimates by $369 million. Jackson reported earnings of $4.65 per share, missing by 21 cents. For this quarter, the revenue estimate is $1.78 billion, with earnings per share of $4.93 expected. Over the last 90 days, one analyst raised estimates and two analysts lowered estimates. Jackson hits or beats analysts' one-year forward estimates 33% of the time. The options market is pricing an implied move of plus or minus 10.29%. For the Jackson Financial chart, I'm going to draw a horizontal line here all the way back to August of last year, where we had basically a testing of a triple top. Then we went into a period from September to November where, in my opinion, it became slightly overvalued, trading quite a bit above its normal PE. And then since that point, we've had a steady decline back to a more reasonable valuation. We did have the drop related to the tariffs, and we have increased back to 81.62, where we're trading at this point. It's trading at a pretty reasonable price at this point. One of the things I really want to see is if it can break above this triple top here and maybe regain some of these highs that we saw at the beginning of November. These were all-time highs. We're also seeing the relative strength improving. We are sitting above the midpoint at 57.35. We did have a crossover towards the end of April. The 12-day moving average is getting close to the midline at this point. I'd really like to see it get back above this midline with a RSI above the 50 for a strong buy price. Fidelity National Financial reports earnings Wednesday, May 7th after the market close. In the previous quarter, FNF reported revenue of $3.62 billion, beating revenue estimates by $291.97 million. FNF reported earnings of $1.34 per share, beating estimates by 13 cents. For this quarter, the revenue estimate is $3.32 billion, with earnings per share of $1.11 expected. Over the last 90 days, two analysts raised estimates and three analysts lowered estimates. FNF hits or beats analysts' one-year forward estimates 91% of the time. The options market is pricing an implied move of plus or minus 5.51%. Fidelity National was trading at all-time highs at the beginning of April, right before the tariff announcements, where we saw the drop in the market overall. Since that time, we've recovered back to this. We've tracked back to a point of overhead resistance. But the RSI is showing positive momentum. We're sitting at 59.37 above the midpoint. We did have a PPO crossover a couple of weeks ago, and we are seeing strength in the 12-day moving average. So I think Fidelity National is showing some positive relative strength and momentum moving into earnings. But this horizontal line here, about where we're trading, could be a point of resistance. F&G Annuities and Life reports Wednesday, May 7th after the market close. In the previous quarter, FG reported revenue of $1.56 billion, beating revenue estimates by $221.5 million. FG reported earnings of $1.12 per share, missing estimates by 8 cents. For this quarter, the revenue estimate is $1.47 billion, with earnings per share of 96 cents expected. Over the last 90 days, no analyst raised estimates and 2 analysts lowered estimates. FG meets or beats analysts' 1-year forward estimates 50% of the time. The options market is pricing an implied move of 18.25%. For F&G Annuities and Life, we've pretty much seen a downtrend since the end of November of last year. There wasn't as significant a drop with F&G as we've seen some other equities due to the tariff announcements. So we're getting close to where we were trading right before those announcements were made. I see some interesting trend here in volume. You can see how it's jumped up here in the middle of March. This is a subsidiary of F&F that we discussed earlier, and it's eligible for a tax-free spinoff here in the next month or so, so I'm eagerly awaiting an announcement on that particular topic with FG. We do see some positive relative strength, but it is still below the midline. That'll be something to watch moving into earnings. Warner Brothers Discovery reports on Thursday, May 8th before the market open. In the previous quarter, WBD reported revenue of $10.03 billion, missing revenue estimates by $129.28 million. WBD reported earnings of 10 cents per share, meeting estimates by 6 cents. For this quarter, the revenue estimate is $9.06 billion, with earnings per share of negative 11 cents expected. Over the last 90 days, no analysts raised estimates and 6 analysts lowered estimates. WBD meets or beats analysts' 1-year forward estimates 50% of the time. The options market is pricing an implied move of plus or minus 10.44%. Warner Brothers had a pretty nice run back from last November through the middle part of December. Since that point, it's come down to a level of around $10.50 per share. Pretty much traded sideways until we got to the tariff announcements that affected the entire market. Since that point, we are seeing some trend back to higher prices. The RSI doesn't look too terribly strong, sitting at 45.51 at the moment, below the midline. The 12-day moving average of the PPO is moving higher, but we're still operating in negative territory. So it is showing weaker relative strength and momentum moving into the earnings. Nexstar Media Group reports earnings on Thursday, May 8th before the market open. In the previous quarter, Nexstar reported revenue of $1.49 billion, beating revenue estimates by $11.46 million. Nexstar reported earnings of $5.63 per share, missing estimates by $2.39. For this quarter, the revenue estimate is $1.23, with GAAP earnings per share of $3.20 per share. Over the last 90 days, no analyst raised or lowered estimates. Nexstar meets or beats analysts' 1-year forward estimates 45% of the time. The options market is pricing an implied move of 7.91%. Nexstar had been in somewhat of a decline from November to February, then had a nice run up to the tariff announcements where it dropped down pretty significantly, and since that point has pretty much been trading sideways. We can see that in the RSI as well, where it's trading below the midpoint at 46.53. We can also see we have a pretty much declining momentum, trading sideways at the moment. It is operating in negative territory. So Nexstar is showing some pretty relative weakness and relative momentum moving into the earnings. LYFT reports earnings on Thursday, May 8th after the market close. In the previous quarter, LYFT reported revenue of $1.55 billion, beating revenue estimates by $8.49 million. LYFT reported earnings of 27 cents per share, beating estimates by 4 pennies. For this quarter, the revenue estimate is $1.46 billion, with earnings per share of 20 cents expected. Over the last 90 days, 10 analysts raised estimates and 9 analysts lowered estimates. LYFT meets or beats analysts 1 year forward estimates 50% of the time. The options market is pricing an implied move of 15.23%. Taking a look at the LYFT price chart, we can see it's pretty much been in a primary downtrend for quite some time. We did see somewhat of a drop with the tariff announcements, and since that time, it's been on a pretty good streak here. The RSI is improving slightly. We are above the midpoint at 60.75. We did have the crossover, and we're sitting above the midpoint for the 12-day PPO moving average. So it is showing positive relative strength and positive momentum going into earnings. Rocket Lab USA reports first quarter earnings on Thursday, May 8th after the market close. In the previous quarter, Rocket Lab reported revenue of $132.39 million, beating revenue estimates by $1.81 million. Rocket Lab reported earnings of minus 6 cents per share, beating estimates by 1 penny. For this quarter, the revenue estimate is $121.37 million, with earnings per share of minus 9 cents expected. Over the last 90 days, 1 analyst raised estimates while 5 lowered estimates. The options market is pricing an implied move of 13.79%. Rocket Lab had a really good run beginning in November of last year. It ran up to about $28 per share and then started trading sideways, traded up to all-time highs, traded a little bit sideways. Then in February, basically till the tariff, it didn't really have a big tariff impact. But we have seen some upward price momentum over the last month. The RSI is positive, sitting at 60.97 above the midpoint. We did have a crossover of the PPO, the 12-day moving average, and the signal line are both in positive territory. So I'm optimistic for Rocket Lab moving into the earnings, although this company has not yet become profitable. That wraps up the review of company earnings for my whole portfolio holdings. If you find this video helpful, I request that you subscribe to the channel for alerts on future videos. I would appreciate a like on the video to help support this channel. Once again, thank you for stopping by today. I wish you a great day and remember to trade well.